Welcome back. We are in our second conversation with Mark Sebastian. He's founder of Option Pit and CIO of Karman Capital. In our first conversation, he told us he does believe that the move away from the Mag 7 into other parts of the U.S. stock market does have legs and will continue. In this segment, we're going to talk about some specific stocks. Let's begin with Apple. You are not positive on Apple.
Yeah, it's not. You're never going to get your lunch handed to you owning Apple. It's a good company. It just prints cash. I just think that hockey stick portion of Apple's growth is over, and this is going to act a lot more like a boring stock. So owning Apple for the next decade is going to be a lot more like owning a Johnson & Johnson or a Procter & Gamble than it is going to be like owning an NVIDIA or a Meta or a Google. I think Apple has kind of separated itself. It's still in the Mag 7 for its just sheer size, but the nature of its business model just isn't that. It really is not has matured, whereas I believe the rest of those are still in kind of that growth phase, and we don't know where it ends.
Let's talk about one of the big earnings stories of the day in the United States. Airbnb has reported results. The market is enthusiastic, to say the least. The stock is up about 14%. What are your thoughts on Airbnb?
Really nice move. It had been stuck in a very tight range for the last 6 months. Its last couple earnings have been pretty disappointing. It not only has closed the gap from its previous earnings that were not great, and the earnings before that, but it's moved itself all the way back to where it was in its earnings in April of 2024. This is one where I want to give it a day. I want to watch the price action. But if it can hold here for 3 days post this gap, I'm going to be looking to go long. I'll probably be buying calls there. If it starts to roll over, I'm just going to kind of move on.
Reddit has quadrupled over the past 52 weeks, going from roughly 50 to roughly $200 per share. It's down now for a couple of days in a row on earnings reaction. Is this a buying opportunity, or are investors turning away from this high valuation stock?
Paul, I think you and I were having a conversation post its last earnings when it was around $130. And I had said, the sea has changed for Reddit, and it's a completely new business model. They've figured it out. When you look at the run, their earnings were still pretty darn good. If we're giving back maybe a tiny little bit. Trading below 200, I'm looking to get on board or to buy more. I wish I'd have bought more on the way up as it was going up. I kept waiting for that 10-15% pullback to jump in. This might be all I get. So yeah, I'm going to be purchasing some Reddit here.
And if I understand correctly, you're waiting to buy Alphabet, GOOGL. But you want the share price to come down about another $10. It's at $185 right now.
Yeah, I mean, it's interesting here. So if it looked like this was going to be the bottom and it started a rally, I would get in. But I'm hoping that it pulls back a little bit more and I get the opportunity to get in between 175 and 180. I think that's a level that's a good level to scoop it.
Okay. Here in Canada, Air Canada is one of the big stories today. The airline has reported results. The big talking point here is how much the stock has tumbled since early December. We're looking at it now. The stock is down 3% today on earnings reaction. It's down 30% or so since early December. What's your view of this stock?
Well, I mean, I'm not an expert on all the airline names, but you can look at the North American Airlines and see a kind of a clear delineation, right? That Air Canada's chart looks a little bit more like American Airlines over the last couple of American had a nice run up, but the last few weeks, American's been pulling back, Air Canada's been pulling back. But UAL, Delta, they've been really strong. Are they stealing business travel from some of the from American and Air Canada? And at the level that Air Canada is trading here, relative to the U.S. airlines, looks like an interesting level to maybe play.
Let's finish with Magna International, the auto parts giant. This sector, the auto parts sector, often gets a lot of negative attention given the trade tensions between Canada and the U.S. We hear over and over again how many times a vehicle or an auto part will cross the border before a finished car rolls off the assembly line somewhere in the U.S., Canada, or Mexico. What's your view of this sector and the stock? The stock's down 4% today.
I mean, it's been a rough slug for this stock since middle of 2021. It's basically trading just off of its COVID lows. So you got to ask yourself how much further can this thing decline before somebody says, okay, this is far enough. And looking at this price level, this gets a lot lower. It's probably worth at least kind of a value play and seeing if it at least catches a bid, if it's to 36 back up to 41, 42 as a trade. The auto sector as a whole, there's not to be punny, but there's so many moving parts right now with trade and with the numbers we just saw this morning with the consumer. I think unless you really owning it, I'd probably be holding it. It would not be a sector that I would be aggressively after because there's a lot of balls in the air right now in that entire space.
Mark, thank you as always for all that insight. Mark Sebastian, founder of Option.